Hi guys, can you hear me?
Yeah, we
Yes.
can.
Yes, you're audible.
Alright, we'll just wait for Shashank to join.
Okay, so how many of you all got Mrs. Bector IPO allotment? Did anyone get?
No,
I
got
got
it at 550.
I'm the only one who got it then. Wow.
Congratulations.
Whoa.
Yeah, I actually got it. Uh,
पार्टी तो बनती है
Power of the party.
Yeah, even I got it.
no, but I think there was an opportunity again today because it was trading around 500 in the morning at around 10.
It got up to 590 as well.
Yeah, you would have made almost
594.
20% return today.
Yes.
So whoever
Yes, you.
invested at 10 a.m. would have made 20% by end of.
Hello everyone.
Yeah. Okay.
I bought
Let
it
me.
at 555.
Sorry?
Should we mute our voices or like it's okay?
No, when I start explaining, you can mute for now, but now we're just doing market update as usual. So any other market update, guys, apart from Mrs. Bector getting 107% gain?
Loris Labs have done this thing for their employees.
What did they
Uh,
do? Or this I
I-
didn't hear.
So it's called employee. What it's called? So basically, they just distributed stocks to their employees. Employee stock option scheme.
Oh shit. Okay.
So the price is rupees 2 and at a premium of rupees 56, making it up rupees 58.
Hmm.
And the number of stocks is 6,07,390 equity shares. So the paid up capital comes out to be, it's a big number, 107. I don't know, it's 10 crores or something.
Yeah. 107 crores.
107 crores, yeah.
Yeah, it's not good because see that means 6 lakh new equity shares have come into the market, which is not good.
So these are new equity shares. So not the promoters.
Correct. It's
selling
new
their-
shares.
Oh, it's going to dilute their EPS then?
No, this is a part of ESOP. If they've already kept an ESOP before, then it's different. But I don't think they had kept an ESOP before. So
Even I think it's they've done it for the first time.
yeah. So that's not good. That's what I said. No, in the gaps, no, sometimes
Yeah.
companies will keep allotting shares to people, which is
Mhm.
not good for people like us, but it is good
Right.
for the company itself. So that's what we should keep an eye out for.
I mean, it's a huge
Sure.
number. These number
Yeah.
of shares.
Yeah, just a question. Just it's a bit off topic, but I heard about there are market makers in every country. Like they place the bid and they place the ask to like provide volatility in the market. So I like
What,
heard about the market makers. Like there
what
are
do you mean
market
market makers for what? Tell me in specific too.
no, like to create volatility in the stock. So they'll only provide the bid and they'll only provide the asks. So in order to like create more volatility in the market.
Yeah, they do that. It's very common. Even operators are there in the market. They do the same thing.
So yeah, so what's their like? I wanted to understand like what's their profit model like. So they commission because
They
by
place the
placing.
bid and they do the sell as well, and they take what they play on the small average price, right? For example, 50 paisa, 40 paisa. They're happy with that.
But
Can we
they
say
do such large quantities that 50-40 paisa becomes like good amount.
Yeah, and a lot of companies do that. Wait, I'll show you one. I'll see if I can get this out. A lot of companies. There's actually only like 4 or 5 big companies that do this. One is called Alpha Leon. Have you heard of it? There's
No,
actually
actually, my brother in Netherlands, he's a derivatives and options trader. So he was telling me about this.
See, there is
So
one
yeah,
company called Alpha Leon. There is one company called Gavitron or Gaviton Research. Okay, this one, but I don't know where the bulk deals. I'll show you. This is how it happens, and these people make enough money. Huh? It's not like they don't. Okay, this one, and last one was Tower Research. Tower Research is actually a quant-based analytic company. So if you actually just look at Tower Research and you go to their website, this is the Tower Research website. They're based. All of them are based out of Gurgaon, but this is basically a quantitative analysis, quantitative trading, you know, algo trading. This is what they do. Now see how they do buying and selling. Okay. Say for example, this was when today, 24th December today. Okay. Where is this? Agroforce Software or something. They bought 1,29,000 but sold only 15,898. But look at they play on 0.01, but usually they play on 50 paisa up and down. So if you look at say Terra Software, which was on 23rd, they purchased at 52.99 and sold at 53.01, 2 paisa. But 2 paisa on 95,000, whatever, they make good amount of money. So if you look at this Cybertech was hitting upper circuit for a very long time. If you guys remember, 10% upper circuit it was hitting. So 152 and sold at 164. Here they made a massive amount of money, but they usually do 50 paisa trades. Like see the Suven Life. Okay, now see, this is basically, if I open my calculator, 105.08 minus 104.94, 14 paisa. 14 paisa into 627 actually they sold it at, right? 627,462. They made 87,000 on this one trade.
So can we say that it is kind of hedging your trade?
No, this
Like-
is not hedging. This is not hedging. Look at this. Look at Gaviton. Okay, BEML today. They made what? Almost 1 rupee. So they would have made 2 lakhs. This is not. This is called. This is called actually high frequency trading. High frequency algo trading. High frequency algo trading. HFT. Right. So they find stocks with volume. The what do you call that? The software finds what is going to what is
So basically
trending.
they play on volatility.
Yes. Look at this.
Okay,
Here
so
also.
basically when the crash happened, so the day that crash happened, so they must have made a lot of money, bro. Like because the huge amount of volatility was there in the market.
See, they don't care whether it's going up or going down. No,
Yeah.
they're not holding long term or medium term. They're holding ultra short term. They place a purchase order at 205.44 and they also place a limit sell order at 20.62. Now, imagine the buy order here and the sell order here. Your stock is going to trade here only for a very long time. Right? Look at this, 1 rupee. 1 rupee. This is like, see, it is not manipulating also. They're just placing a buy order, sell order. They're playing with quantity. This is a volume game business. That what they're doing right now is a volume game business. First of all, to even buy this, okay, to place this order, it is 218.29 into 25 lakh shares. You need to have 1, 2, 3, 4, 5, 6, 7, 55 crores they've placed, by the way, on Tata Chemicals on this. Oh, no, not Tata Chemicals. RBL Bank, 55 crores ka buy order dala hai, and then they've sold it at just what, or not even 30 paisa gain. So if you calculate, it's 0.46 minus 0.29, it's 0.17 gain into 20. How much did they sell? 27 lakh 82. 4 lakhs they made. 4.5 lakhs they made on a 55 crore investment.
Yeah, in a day.
In a day. So they keep doing this almost every other day, but they don't do it every other day. Some guys do it. Like for example, the other one used to do it every other day, 16th, 17th, 18th, 24th. It depends on the software that they use that finds the next game here. Because imagine they invest at this point and they put a sell order at, they invest at 205 and put a sell order at 206. What if it doesn't go to 206 and it falls?
Yeah.
They're fucked, right? Even if it's a 1% loss, that's 5 crores. Or not 5 crores, 55 lakhs. So it's very risky what they do. But these are not market makers. These are not operators also. Operators are different. Operators do pump and dump schemes. You know what pump and dump schemes are? And it's very easy, by the way, guys, to find operators. You know how to find operators?
Harshad Mehta, you what the Bear Gang used to like what is shown in the Harshad Mehta.
No, nowadays, yes. Operators are basically people who start buying. They silently buy. It's like all of us in this cohort start buying one share, okay, that nobody has heard of. Maybe it'll be 50 paisa or something. All of us will buy first. Okay, after all of us buy, every one of us goes to Money Control and says on each of the stock, and then goes in there and says, buy this one stock, it is going to go up 35%, 40%. Everyone will start buying, we sell and get out. This very similar thing happened to, if you heard of this stock, Suncare Traders. Have you heard of it? I'll tell you how to find this also. How to find operator games. Okay, just look at this stock.
A lot of people come.
Vishal Fabrics is also another example.
I didn't see Vishal Fabrics, but this one was very clear because I'll show you why. Okay. Let me find that. Because everywhere I used to go, no, every board, every any share on money control, Suncare Traders was there. So for example, let me check something where there's very less comments. Okay, let's say Aarti Surfactants. I hate the new money control, but what to do? See this. Can you see this? On 2nd December, this was a trend going on. Aarti Surfactants, not a share that will go wrong. You can buy and hold. Suncare Traders, again, brilliant stock to invest in tough times. Now, best way to do is just click on this guy or Susan, whatever. Now you will see the comments here, the post here. Everywhere it's the same post. Can you see this? This is called operator game. Suncare Traders, Suncare Traders, Suncare, everywhere in each and every stock they go and post. And this is just one guy. Huh? I've seen multiple guys doing this. Everything. His only purpose of this account is to spam everything. And they have a script to spam. So it goes to each post and it just keeps spamming there.
So doesn't money control like find out and ban them, or like it
But how
happens
you will
on-
ban? It's a new account. It's a new account and he's posting nothing wrong. So it circumvents the thing. Now, if you actually look at Suncare Traders, this is not a good place to look. I don't like the new, this one. Let's go here. But this is how you find operator stocks and stay away from them as much as possible. Okay, if you look at the last 1 month trend, look at this. December 2nd was when they started posting, remember?
Yes.
So in this area, they have accumulated. You can see the volumes here. This is where the operators have started accumulating stocks. Okay. And then December 2nd, they start posting it everywhere. Now the stock from 0.74 went up to 1.19. And you can see the volume here. Entire operators sold at 1.19. So basically they started from, maybe they started from this area, 0.75 to 1.19. They made money. And then the stock just went lower circuit, lower circuit, lower circuit and started trading at 0.8. This is how operators play. A lot of companies, a lot of things happen the same way. Like even if you check DFHL's, have you checked DFHL? DHFL.
Yes.
Yeah, they won.
Same shit. I don't know whether it was operator or not operator, but whenever something goes up so much like this constantly, now it fell, right? It fell. Now again, it went up for 2 days and then it fell again today. So no one knows what's going to happen. But whenever you see comments like this, just stay away, dude. Just stay away. You're not going to win that game, basically. Got it?
Also, Shashank, that since new shares are being introduced in Laurus Lab, so when the market adjusts the price of Laurus Labs shares, so can we say that we will get another chance to buy them again?
I don't think it'll correct so much because only 6 lakh worth of shares were issued. And they had around 10 lakh shares, I think 10 crore shares in the market, and 6 lakh rupees worth of shares means it will be much less than 6 lakh shares, right? So I don't think the correction would be so much. It is a very small amount compared to the number of shares in the market. You understood?
Yes.
Yeah. So let's see.
Shashank, one more question.
Yeah.
Shashank, whenever I like researched a company on Screener.in, in the con section, it always shows the stock is trading at 6 times its book value, 10 times its book value. So what basically why is that a con? Like book value, like what does that mean?
Just means that it's slightly overvalued. You're talking about this, right?
You have explained this in the free meta series.
Yeah, it's there in the meta series. Book, see, whatever it is, anything which is too high is bad. Simple. Like, for example, you check PE, right? If the PE is lower than the industry PE, you say, oh, the stock is undervalued. It should be much more. But if it goes above the PE, you'll be like, this is overvalued. Same way, the book value should also not be too high, or there's a difference, right? And the book value is very subjective. For example, book value for banks are completely different from book value of Laurus Labs or every industry has a different metric for book value. So you rather look at PE. PE is basically a standardized thing across every industry has its own PE. But I've done an episode on this, so you can check it out on this one.
Thank you. Definitely I do.
Yeah. Best thing which is nice is ROE and ROC if it's high, which is very good for you. Basically, any company that has a high ROE, ROC is very good for the company. Basically, it's good return on equity and good return on capital employed. That means it is a very good company. And even if you go to Screener and look at screens, there are some screens. Look at this high. This is a very nice screen. It's called value stocks. High operating profit margin. That's what we look at as well. Good ROCE, which is good capital on return on capital employed. Means if I'm putting 1 lakh into the business, how much am I getting out of it, right? And low debt to equity ratio. Do you guys know what debt to equity ratio is? Basically, low amount of debt. Okay, very low amount of debt. There's a ratio for it. So if you look at value stocks, these are the stocks that are in like very good. But out of that, if you see, most of the stocks are very big stocks, right? These are stocks that are like already big companies. We don't, it's too high for us to buy, or this is very safe bet kind of a thing. So if you want to find out which is the new upcoming stocks that are there, you just go do put another column and just put the simple one as market capitalization. Okay, just put market capitalization and do save columns. Now go filter according to market capitalization. Where is market cap? Okay, this is highest to, I want lowest to highest. Now we go lowest to highest. From here you start analyzing, okay, the stock price of this something called Xplaso Solutions. Now this is the tough part in life, okay, to find out the winners. It is not easy to find out winners. So what I usually do is I have my own screen where I'll keep doing this, keep opening stuff. And then I do a quick review. A quick review is, remember what we spoke about, quick review. Is the sales,
OPM.
Very simple. First, I just look at, is the sales growing year on year? Okay. Or quarterly also. If it is growing, this is okay. This is decent growth. Not very bad. Not very good also. Let me look at operating profit margin. Okay. Decent enough. Okay. Everything is decent enough. Net profit after tax is also there. Reserves is good. Borrowings are zero. All this is fine. Then I go back up and then I check how much return it has given in 1 year. Last year it was at 278. Now it is at 527. Not bad. Then I go into figuring out what this company actually does. Get it? Basically, this company in the last 1 year has almost given double returns. And if you just filtered by three things, right? ROCE, operation margin, you got a very good stock. Then you deep dive into whether it's good, bad, ugly, or whatever. But this is how you do it. Go to GM Breweries, only 800 crore market cap, very small. But past 1 year, it's hovering around the same range. Very boring. Let's see 3-year trend. 3-year trend is actually negative. Now let's see what is happening here. Sales. Oh, look at this. Dead because of COVID. This is a brewery company, so dead, right? So maybe it's not doing well in the last 3 years, even though it's okay. It should be doing good, but it's not doing good for some reason. Borrowings also not there. So then, even though the stock metrics are good, it's not delivering a good return over year, right? So if it's not delivering a good return over year on year, then there's no point of you keeping the stock, right? So cancel it. I want something that will do everything is good. And it's very difficult to find such fundamentally good companies.
I was researching this company. Alkaline means that looked
Very
like
good company. Very good company. So I'll tell you what are the good companies. One is Granule India. Okay, this is a very good company. 9,000 market cap, not that expensive, not that cheap. If you look at the 1 year return from 122, it has gone to 373, so almost three times returns. If you look at 5-year return, also very good. 3-year return, also very good. The reason why it is good is if you go to the revenues, quarterly revenues are very nice. Operating profit from 16 is going up to almost 30. And if you look at the yearly also, it is hovering around 20. The net profit always. The EPS growth is always there, okay, which is great for me. Their borrowings are slightly higher. Look at this, 772. But that is why it's growing. Got it? Consistently good revenues. So you find hidden gems, and I keep telling you guys also look at Value Picker. I don't know how many of you all actually sit and read Value Picker.
This stock called Aztec Life Sciences. I read on Value Picker only. It's a good stock. I think it's owned by Godrej.
Okay, what is it called? Aztec,
ASTEC. Life Sciences. Yeah.
Okay, very good 1 year return, 432. Oh, 3 times. Very good. Market cap slightly lower, which is good. Stock P is around 30. Return on capital is 20.5, which is also good. What else? Face value is 10. So good. We can expect splits. Go down. Quarterly result. Okay. Let me go to yearly result. Good. Yearly result every year is growing. operating profit is going down slightly in March. But let me look at June, 112 and 115. That is how much? 260 crores already, another 260 crores. It should hit around little less than 523 this year. Look at the borrowings, very low, reserves good enough, good ratio, good cash flow also. Yeah, this is a good company on face value. Then you go deep into what are they doing, news articles, annual report, investor presentation, stuff like that, peer analysis. But this is how you do a quick analysis of the company. Get
Right.
it? Quick.
Shashank, just a question.
Yeah.
Just now you said that face value is 10, and after that you said we can expect splits. What made
Yeah.
you say that?
No, when the face value is 10, that means this is a full-fledged stock. That means in the future they will announce a split. Split maybe 1:2 or 10:5, which is half, or 10:2, which is 1/5, or 10:1, which is 1/10. Right? They can do a split. Usually, why I say it's good when the face value is 10 is because whenever they announce a split, the stock tends to go up. Artificial rally. It's like when a bonus is announced.
Okay, cool.
Short-term artificial rally. That's it. Nothing else. But you
Yes,
should
sir, I
always.
have a good company. Would you
20
mind?
microns.
What?
I just discovered a good company.
Tell me.
JB Chemicals and Pharmaceuticals.
JB
I
is a
thought it
very
was good.
old company. It's not a. It's a very old company. I mean, it's good only. I mean, it's.
The metrics and fundamentals were good, so I thought it was.
Okay, so let's do it how we would do it in Screener. Okay, once I give you this Excel sheet, let's check it out. Okay, basically you get all this, you put in the Excel sheet. This is how it looks. Okay, first thing to check, as we mentioned, number of shares. Is it increasing, decreasing? What is happening? Wow, the number of shares have actually decreased in the last 3 years, which is a very, very, very positive sign. That means it has removed the shares from the market. So I don't know what has happened. How has it happened? Is it because of say some buyback? I don't think they did a buyback. So how did it happen? So we need to check. This is how you do research. Okay. Okay, JB Chemicals, we'll go to, I hate this. Wait one sec. Where is the announcements? Okay, a lot of disposal by the promoter group, which is not a good sign. Everything that happened on November 9th, just keep an eye out on this, and this big quantity. Okay. Board meetings, dividends, bonus splits, rights issue.
It's written off-market disposal. What does that mean? It's not an offer for sale, right?
No. Oh yeah, they did a buyback. See, found it. Can you see, guys? This is very good. Whenever there's a buyback, it is very, very, very good for the company. That means what happens? Demand supply. Obviously, the shares are going lower. That means the company stock will go high. And whenever the company is doing buyback, that means it's a very good practice. That means from the extra revenue, it's taking the stock money back. So that we discovered from this. So if you're looking at this, it's a good sign. Okay, so you can just type good here when you do your own research. Stock price is obviously going up, so that is good for you. The market cap of the company is also going up, so this is good for you. Till now, phase 1 cleared. Okay, we can move on to the next.
Shashank, I have a question.
Yeah.
If a company announces buyback, then should we give them their shares back? I mean that how much premium is good, like to enroll ourselves into that buyback?
That depends on your appetite. If you're a short-term person, okay, what people usually do is they buy the stock and they sell it at a premium, get 20% gain straight away for tax, or 10% premium, or whatever the premium is, right? But if you're a long-term person, I'm looking at 50-60% gain, and let the buyback happen, and then obviously a stock price is going to go up. So for example, if you look at the stock price here, 310, they announced buyback. If you had sold it to them at 350, then next year, look at the price now, it's almost double. So would you be a person who sells it here, or would you be holding it till 509? It all depends on your immediate thing. So all these, intraday traders or day traders or short-term positional traders, they do this. They see a nice buyback, they see a nice dividend, they'll buy it and then keep it only for the ex-dividend date and then remove the money so that extra money comes to their bank account. Nonsense, small things.
I mean, if we, like you said, that you need to have some extra money to play around with, so we can try that.
Yeah,
them.
you You can, but you have to check if the buyback is from open market, if the company is asking you to take it back, or will the company just buy back from the market without telling you. Different forms of buybacks. You'll have to read about it. Let's see, is there any buyback right now?
Wipro, Infosys.
NIIT Limited is proposing a buyback.
Oh, there's Wipro buyback as well, right? Just now it came out.
Yes, Wipro.
Let's read about it. So this is, I think, an open offer, right? Okay, so Wipro announced a 9,500 crore share buyback, which will commence on 29 December and go on till almost 10-11 days. Plans to purchase up to 23.75 crore equity shares at 400 rupees a share, aggregating to 9,500. Currently, the share is trading at what? 300 and something, right? 382. So barely any gains. But did it? This is 1 day chart. Let me look at 1 month chart. They announced it quite recently, right? See how the share ran.
Exactly, X price is 353. Actually,
This is
when
the
they
price
announced.
that they announced, 353. Look at the jump from 353. So if you're a long-term investor, you would have waited. You would have made already this much, right? Now, after the buyback goes out, or after 23 crore shares go out of the market, again, it'll be better for you. It'll eventually go up only. That way.
Shashank, NIIT Limited has also proposed a buyback.
Oh, that's okay. I'm just giving you an example of what buybacks are and why is it good for the company. Okay. We'll not get into who's doing that. Okay. So these three things are good. Okay. Who recommended this stock? We'll put a name to it so it's easier. What was your name? Who recommended JB Chemicals?
It was me, Krish.
Okay. Krish has said that JB Chemicals is good. Now we are looking at how we would analyze. Okay. Someone comes and tells you that a company is good. Say, for example, Krish came and said, Shashank, this company is good. I'll be like, okay, cool. Let me look at it. It's not like Krish told me, so I'm going to buy blindly. No, we have to do our own research always. And this you will, when you start investing in the stock market, you will get 1,000 people who will come with tips or so-called expert analysis and say, dude, you have to buy this company. It's very good. I'm telling you, no, maine research kar diya, buy it. You'll be like, cool, let me do my own research. If it's actually good, I'll buy it. If it's not good, even if it goes up tomorrow, you should not feel sad about it. Because if it goes down, that guy who told you to buy it is not giving you money, no? Or you tell him, you're confident it will go up. He'll be like 100% confident. He'll be like, okay, I'll invest the money. If it goes down, you cover my loss. Then you invest. Tell me how many people will guarantee that. So it's better you guarantee yourself. Okay. Look at this. Now sales, first thing that we would look at. Okay. Is the sales growing year on year? Last 5 years. I usually look at last 5 years, not more than that, because last 5 years is a good enough trend for me to understand. So yes, the sales is growing last 5 years, not bad at all. Okay. Expenses growing. Is the expenses changing at a very different proportion? So whenever you read numbers, okay, guys, I'm going to zoom in a little more. Whenever you read numbers, the fastest way to easily skim through numbers is to find big variation in prices. You know what is big variation? Means something very big and up and down. If it is an average, don't care too much about it. Look at this. For example, if I look at this last 5 years of operating expense as a percentage of sales, 84, 83, 83, 85, 81, 79. Nothing alarming here. So I won't even give a thought. I'm like, nothing much has changed here. It is fine. But suddenly if this 81 was 95, then I'll be like, what the fuck happened in March? That's how you catch numbers. For example, let's look at operating profit margin. Okay. This is operating profit margin growth. No, I want operating profit margin. Last 5 years, anything alarming here? What do you think is off here? Anybody?
Jump from 15 to 19.
Not 19, 15.
15, yeah.
When it's 19, it's good for you. No, why do you care if it's going up? Unless it is 29, then you'll be like, why is it gone up so much? That means, is it something wrong, or have they shown something in other income or something like that? You don't know, no? But 15 is bad. Right? So what happened in this year? Why did it go down? You need to figure, even the sales growth compared to last year and this year is only, look at the drop. It's only 11% to 4%. Expense still remain the same, even though the sales dropped. So something was off. So you do more research and find what happened in March 18. So March 18 is something that we feel that there is some weird thing that happened that we will research tomorrow. So you just put in a different color if you want. Not this. Let me just put a random color. Okay, let me put blue. We will check what happened later on. Okay, then what? Depreciation, we don't care what happened. Interest paid, again, we don't care what happened. Profit before tax, again, we don't care about all this. We'll just directly go to net profit after tax. Last 5 years net profit after tax. Wow, look at this. Again, what is the difference here? What is anomaly here?
138.
Again March 18. So this is how you read through numbers quickly. If something is normal, the average of the last 5 is normal, you are okay with it. Fine. But if you also look at it, this jump is slightly high, very high actually. 193 to 272. So if I really want to dig deep and find out why this number from 193 became 272, it is a very big jump. Yes or no?
Yes.
So let's go back and figure out. This is how you do analysis, okay? From the last year to this year, the sales growth was only 8%. So that means the sales didn't grow that much. Okay, that means if your sales is not grown so much, but you're making mad net profit, that means your expenses should be less. Okay, expenses less by 2%. Fine. Till here, I can understand a 2% jump. Okay, so 305, 367. What else is, look at this. Growth is 40%, growth is 20%. Fine, fine. Depreciation is also okay. Interest paid, nothing great. Profit before tax is this much, but the difference here is he's paid less tax this year. Understood? See the game. So the tax paid here, 32% last year, was only paid 21%, 21.93% here. If he made 286 crores last year, he paid 93 crores. But if he made 348 crores this year, he should pay much more than 93 crores, almost 100 crores. But he's only paid 76.5. Because of that, the net profit has jumped from 193 to 272. Any normal investor in the market, when they announce results, the first thing that they would look at, net profit from last year to this year has jumped by 10%, 20%, 30%. You've seen these articles, right?
Yes.
But you have to go find out, because if he's paid less tax this year to show a better result here, that means next year he's going to pay very high tax.
How is that possible? How can he pay less tax?
There are different ways to do it. See, look at this. It's always fluctuating. You can defer the tax. A lot of nonsense is there. The best way to find out is to go and check their annual report. If you go to this company's annual report and check out why the tax of this year and last year, something will be there. And I can do it right now. If you want to do full depth analysis, I will show you how to do it. Okay, JB, and we'll finish it off properly. We'll learn how to. So when you guys tell me, how do you find a good stock? This is the amount of effort it takes to find one good stock. One. Okay. I need it for the year 2020. This is which year? 2019, 2020. So I needed 2020. I don't know whether they've given it. JB Chemicals annual report 2020. Okay, it should be there on BSC.
Shank,
Yeah.
I had a question. Reliance just paid 2% of the tax in the June quarter. How is that possible even?
I'm telling you, you can pay minus tax also after making profit if you have a good CA.
2% tax,
You have to read the annual report. You will figure everything out. They'll show some weird refund, some nonsense they will show.
Yeah, refunds.
Wait, I don't think these guys have uploaded their only 2019 annual report is there. 2020 annual report hasn't come yet. There's the best way to check is on their main website itself.
The third link is, I think, the JB Chemicals.
Sorry, I can't hear. I didn't understand anything you said.
I said that the third website was for JB Chemicals.
No, it's okay. I found it here. I think this is the one. I don't know whether this is annual report, but let's check. Annual report. Okay, let's go. We don't need to do anything else. We directly need to go to profit and loss. 83. Actually, let's go to consolidated. I don't like looking at standalone. 137. This is balance sheet. Now I'm going to zoom in. You can see, guys, this is in lakhs. Okay, so that lakhs means you have to divide by 10 to get, divide by 100 to get crores. So it's actually 177 crores. So don't get confused. Okay, revenue, everything's fine. Let's come to profit before tax. 348 crores, correct? Which was the same in Screener, and 286 crores, right? Just confirming to you guys. 286, 348. Now we will look at what has happened and you will see everything is here. Current tax. Obviously the current tax is higher than last year, has to be. The current tax he needs to pay is 84 crores and this is 78 crores, correct? But something called deferred tax, minus 7.8 crores has come. Earlier year tax minus some refund he's got. But this, what is deferred tax? Something he's put as deferred tax where he's paid 8 crores less. That is why he's paid less and his net profit looks very good. Okay, now it's not over yet. Okay, then you look at other income. Items that will not be classified to profit or loss, remeasurement of some defined benefit plan on the income tax on above. Okay, that is again minus 7 crores, almost 7 crores. Items that are reclassified to for something, some nonsense, again something has gone. Final comprehensive income at the end of the year, they're showing 257 crores as compared to 189. This is why it is super important to read, because what if this thing 991 or 676 is only a one-time expense, which only came in 2020. So next year, you will not have this, and you will predict that the company is going to be so good, so amazing. But then suddenly you'll see that a problem is there. Understood? The best way to analyze, you'll be like, Shashank, then how do we find out what is good, what is bad? Correct? The best way to analyze is these numbers, profit before tax. Assuming the tax rate for this company at an average is the same, then the true value is profit before tax. Because see, all this is very important, because if this is wrong, then your company is dead. Correct? If the sales are not more than the expenses, company is automatically dead. Agreed? So let it come onto profit before tax. If profit before tax number is increasing, then it is a good thing. But very important to check other income also here. Sometimes they fake, they put some random other income number which is very high. This is what Mr. Ambani does a lot. But if it's on an average, okay, 44.1 crores to 5 crores, fine. Nothing compared to 348 crores, very peanut amount, 1 crore increase. So the best way to see is that only, how the proportion plays into the picture. Fast, you can easily see fast. Now look at this one more, by the way. There is 10, no, what is this? 10 or 1 crore? Lakhs, okay. Almost 10 crores exceptional items that have come this year. Refer to note 42. Okay. Now what is this? If you want to see, you have to do the hard work of going to note 42. And it is very important to see what this is, because that 1000 crores is not going to come to you next year, correct? So this is how you actually understand, deep dive into a stock and figure out whether this stock is good or bad, because numbers can tell you one thing, but they can also lie to you. The only place they can never lie is in this document. Okay, look at this, and it is so deep. It even tells you the revenue that has come, how much is it from India, outside India, and how has it changed from last year to this year. So it's very deep. Okay, every analysis is very deep. 42 exceptional items. Exceptional item of 10 crores represent amount payable on account of compensation to be deposited with Gujarat Pollution GPCB, ordered by Supreme Court for some judgment that they gave something. Basically, they had to give 10 crores as a compensation to be deposited, because I think they did some bad pollution somewhere. Maybe, I don't know, I have to read about it. But I know that they gave 10 crores. They spent and they gave 10 crores. So that means next year they're not going to give 10 crores. So this is why it is important to go through annual report. Questions before I move ahead?
So Shashank, the numbers in screener can be wrong, but it won't be wrong in annual report.
Correct. What you said is right. The numbers here can always look good, but as I said, this is only first level of analysis. Okay, it is growing. Okay, this is good. Cool. Now I will go more deep into it. If this only is bad, then there is no point opening the annual report. Correct? You'll waste time. Why? You have to be smart about this. You have to work faster, right? So if you, and the best way to do it is what I told you. Very simple steps. Okay. First, go to screener, quickly skim through this. If this looks good, export it to Excel. Open the Excel and start analyzing the variations. If there's very high variations, like 15%, something happened in March 2018. We need to figure out. And it should 99% be written in the, it should be written in the annual report. So even when you go to annual report, I'll show you something. If you go to annual report, go back to top. Okay. I'll show you where to read it also. If you want to understand why this result was bad, there's something called financial highlights. Okay. Page number 7. Let's go down. It should be here. Page number 6, page number 7. Okay. This is financial highlights. Okay. These guys are not done it properly. Usually the company itself gives you a small brief about what has happened in that year. Okay. Here it is. Here it is. Financial highlights. You can see, right? Here it is. So dividend, what happened in the dividend? They said that the director gave a dividend, very good. Buyback of that year, very clearly explained the buyback as well. Then they say operating and state of affairs. Now you'll understand what happened. Sales for the year at 1,600 crores were 9.68 higher over the previous financial year. EBITDA was at this much, whatever, this much, etc., etc. Domestic sales was this much, overall formulations was this much. So this basically gives you a quick analysis of what has happened. Now look at the last part. Profit before tax and exceptional item at 349.56 was higher by 29.82 over the previous year. The profit after tax of 263 crores was 44% higher than the previous year. The growth in profit after tax was aided by lower rate of tax opted by the company. So it has to be, so whenever this report is done, they have to be super clear. They cannot hide. If they hide and they get caught, they're screwed by SEBI. So here you can never lie. So a smart guy who reads the article, who reads this entire thing, will understand exactly what is happening in the company. And that is when you'll become a true person who understands the company in and out. By looking at screener, you cannot understand the company in and out. This is where you have to read this entire document. Not entire, you can skim through most of it. Like all this you don't care about. Important things you need to see. You keep going down like this. Okay, this I've already seen. What else is there? Blah, blah, blah. Keep going down. Lot of small hidden things you find, by the way. So you'll never know what you'll find. And the best thing is you should, if I don't know how many of you all have read Reliance's annual report. Did you guys see it? How many of you all read Reliance's annual report of 2020? So Reliance annual report of 2020 is a dream to watch, or it is a delight to watch. It is the most beautifully described annual report or put up annual report that I've ever seen. I'll show you why. Okay. Directly the turnover, 6,59,000 crore turnover, blah, 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 normal stuff. But the best thing is he shows you everything in a very picturized format. Like for example, did you know how much Reliance Retail actually does? Did you know how much other companies do? And Reliance Retail is not a listed company, right? It's still a very, it's not a listed company. It's a private company, but he's given everything. You can check it out internally. Wait, I'll show you where it is. He's made a separate slide for each of their business outcome. And he's shown, okay, retail, look at this. Reliance Retail, okay, does 1,62,000 crore revenue. 1,62,000 crore, and profit before EBITDA was 9,600 crores. Reliance Retail is already a profitable company. Now, if you want to get more knowledge, there will be so many brands that you didn't know was owned by Reliance, like Ajio.com, Reliance Digital, Jio, all this, you know, these are basic trends, right? But then you go more deep into it, exclusive partnerships with which company that they have. Tumi, Superdry, all of them are actually Reliance partnerships. If you look at fashion and lifestyle, there are so many other companies that are owned by Reliance, which you would never know. Okay. And then they show you who's the main person here. And obviously Akash Ambani, Anant Ambani and Isha are there everywhere. But it shows you each and every business of Reliance, how they're doing their operating model, their business model, because they're so big, they can afford to show you everything. They don't care at all. Right? All these brands, Armani, all the Armanis, Jimmy Choo, Burberry, everything is under the Reliance Retail wing, and they have an exclusive partnership with them, not a normal partnership, but an exclusive partnership. Now you go down, this comes to your Jio. Look at all the things Jio has. You might not know half the things that Jio has because we are only limited to certain amount of knowledge. We
What
know
is
all
exclusive partnership?
Means no one else in India can tie up with Armani apart from Ambani. Exclusive, only me and you can do it.
I mean, how have they tied up? Like, do they own the land?
No, they'll either have some profit sharing agreement, or they will buy from Armani and sell, or there's something they'll have. That's depends on how the agreement works.
Okay.
They would have been a franchisee model, possible. But just look at this, right? In Jio, you know, Jio Savan that they bought, Jio TV, you know, there's something called Jio Health Hub. There's something called Tesseract that they're building, which is basically AR, which you would have seen if you had seen their recent, when they presented the, what do you call that, AGM, they came in this weird AR mode. Then there is something called Jio Switch, Jio Bank, we know, Imbibe education platform of Jio, Jio GST. There's so many things that you would not know otherwise, but just by reading one annual report, you will understand what this bloody Ambani is doing. Look at this. Got it? Just give me an example of how to deep dive. So now we understood this. Let's go back. We're back to our slide. We understood what was the problem here. Some weird deferred tax problem. right? So we know that this net profit after tax is not the real net profit. If I actually want to find out what the real net profit is, I will take 348 and multiply it with this percentage. Okay, that is already in percentage. 1 second. If I want to know what the real amount is, net profit after taxes, it is 113. No, 113 I have to minus from 348. That would be, the actual tax amount would be 113. It would be around 235, basically. Not 272, but 235, which is okay, which is not bad. But this is how you find the true net profit. Understood? Any questions till here before I move ahead?
Shashank, I have a doubt.
Yeah.
Yeah. So in the OPM percentage of the sales, so you're saying that 17%, 15%. You say that there are like for a drastic change, what would be the like percentage amount? You can say it as good amount of drastic change, or like what is it?
That you have to understand first of all. See, for example, when I look at last 5 years,
Okay.
17, 17, 19, 21 means upward trend.
Okay.
Out of the 4 upward trend, I'm seeing 1 downward trend.
Mhm.
When I see the downward trend, that downward trend is obviously done everywhere. My net profit is downward. So that means I know something's happened here.
Okay.
I don't know what. I've still not gone to March 18 report, right? But I know something was wrong here.
Okay. So if we can consider like the March 19 is 19%, and suppose instead of 21%, it is around 24 or 25%, would you consider that as like
I
drastic
would.
change?
I would.
Okay.
Because if it's going up by 2% every time, 30 into 60 into 2%, 2%, 2%. But if it goes up suddenly by 10%, I'll be like, okay, that means maybe something is not continuous. Maybe, you know what is continuous, right?
Yeah.
So maybe some other income or something weird has happened,
Okay.
right? So that is how you look at it.
Sir,
Yeah.
as you said that something is wrong with the company, how to find that wrong thing?
I just showed you, you have to go into annual report and search it.
Okay.
Like, remember, I told you this tax looks weird. Let's go find it. We found it from the annual report. Tomorrow, if you feel that something's wrong here, we have to go find it in the annual report. So if you want to know why the sales didn't grow so much, okay, basically the why this March 18 looks bad, because the sales growth was horrible. Only 60 crore growth. Yes or no?
Yes.
So you go into the annual report of 17-18 or 18's annual report and find out why the sales came so less. Remember that segment reporting I showed you? In segment reporting, you can see that how much is from India, how much is from outside. There you compare it to the last year and see why what didn't grow. Maybe something didn't grow as well. So that's how you find out.
How did you calculate the actual profit before tax?
This is profit before tax, correct? 348. And the last year it paid around 32%. Assuming don't pay 32%, pay 30%. So I do 30% of this amount. Then I get the actual tax. Understood? Any doubt?
Shashank,
Yeah.
For companies like SBI and banking companies, there's no operating profit margin only in Screener and all. It's called financing profit or something.
No, because I told you, banks operate on a very different model. They have something called net interest income. That we will cover. I will cover that also later. That is net interest margin and net interest income. That's very simple. Logically, it is very simple. How do banks make money?
By lending.
By giving you loan.
Yeah.
Okay. Where do they get the money from that?
From people like us.
Savings deposit, fixed deposit, whatever deposit. We only give the. Yeah. So basically what happens is if I put an FD of 1 lakh for 5 years, the bank gives me 5-6%. But that bank takes my 1 lakh and gives it to Krish, who wants a loan at 14%, 15%, 16%. So the bank ideally makes only 15% minus 7 plus 5-6%, which is around 7-8%. So they make 8%. Out of that 8%, Krish might not give the full amount. He'll be like, I'm bankrupt. Sorry, bad loan. So what is the actual margin that they make? 3%, 4%, 5%. So the more they borrow, the more they lend, is the only way they make money. Banks only make money by lending, nothing else. Or like other things are all small money, right? Lending is their biggest game, right? So the problem here is when the banks only can lend and make money, that's why you see that the public sector banks, a lot of scam happens because they start getting greedy for a higher rate of return. So Vijay Mallya will be like, listen, you give me 100 crores loan and I'll give you, instead of 15%, I'll give you 18% return. The bank is like, awesome, my margin increases so much. I trust Vijay Mallya, I'll give him money. but logically, financially, it will not work, right? And the bank guys know it won't work. The bank guys are not stupid. So the bank guys will tell Vijay Mallya 18% is impossible. With your current revenue, you can never make 18%. Vijay Mallya is like, you're talking too much. Tomorrow I will give you an Innova. You shut your mouth. He'll be like, cool, give me the Innova. I will not talk. I will approve your loan. This is what happens in real life.
That's difficult for me to know whether SBI, who has an SBI basically given.
SBI is, if you look at any housing, any company which is going bankrupt, SBI's name is always there with a big amount. Always.
Given a bank, you don't know who has it lent the money to, right? So you can't make a judgment as an investor.
No, they don't disclose exactly whom they've given what money to, but they disclose the portfolio basis, like how much they've given to companies, how much they've given to SMEs, how much they've given to individuals.
Okay, so when I import it into Excel, the banking thing,
no, you will not
this
know.
Operating profit, will it, be overruled by the financing thing?
Let's try. I've never tried it. Good question. I have never tried it. Give me some bank name. RBL Bank.
Anything. Okay.
Yes, bank. But it won't affect operating profit, right? Because
it should not. It should not. But let's see. It should export the way it is in here. Let's see. But
also, Shashank, the market cap of Kotak Mahindra Bank is like way greater than SBI, but still, why is SBI a bigger bank than?
1 second, I'll tell you. Okay, can you see this now?
Yeah.
Okay, let's compare it. Okay. Sales 8514. Let me go back here. Revenue. Okay, this is. Why is the numbers only different? Okay, wait. The financial profit is minus 1025. Yeah, okay, this doesn't work for this for some reason. So don't look at the sheet for banks. Banks, I'll teach you how to look at it from here only. It's very easy. From here.
Shashank, I had a question. That like we heard, right, like the bank, like for example, gave a loan of for example, say 600 crores and settled for 470 crores. So that settlement, so that 130 crore is a loss, right?
Correct. They call it bad debt. It's called bad debt, and they classify it under non-performing asset or NPA. I told you banking is a whole different game.
So banks like are happy, like we willingly like settle for like 470 crores.
Yeah, because once they understand that they won't get it, what to do? There is no point, right? They'll be like, "Kuch bhi de do, bhai. I'm okay." So the best way to understand, I always tell, if you want to understand about an industry, go to Trendline, click on reports, and just read a research report of one of the biggest market players out there. For example, just read this report. It's free. They don't charge you anything. The best way to understand is to read this, and you will understand. So this is how it is, right? Net interest income. This is the income that they make. Net interest income is how much they've given versus how much they borrowed, whatever the total amount of interest income that they've made. Only 561 crores out of all the buying and selling. This company made 561 crores in FY20. That's how it is. Operating profit after their expenses got cut is this much. Net profit is 262 crores. Net interest margin, 4% is what they make overall. Understood? 4%. Now, if you look at another things that are very important here is NPAs. What is their NPA? If it's there somewhere, we can check it out. Bank is a whole different thing. I will go through it separately some other day. But if you read all this, automatically you will understand a lot. Okay, let me check where is NPA is written. They always have, asset quality is called NPA, by the way. Asset quality means the number of whatever, the bad debt should not happen. The asset quality is increasing means it's a good sign. That means they're recovering a lot of loans, or their loans are getting cleared very easily. They're not having any bad debts. Okay, so asset quality is very important. Systematic credit card growth they're showing. Market trends, loan growth. Okay, which is good. Retail makes a comeback on the top 20 borrow. Something, whatever. You got the gist, right? You got the idea, right?
Yes.
Yeah.
Baad mein I'll go into detail because this is a full different game for you to understand. This is not that simple that you think it is. But basically asset quality is the most, so this is the most important. These two factors are very, very important. gross non-performing ratio, and net non-performing assets. This is very important. Okay, but we'll get to this later. Tell me, someone asked a question.
Yes, I asked that though SBI is a great big bank than Kotak Mahindra, still the market cap of Kotak Mahindra has a greater numerical value.
That's because, no, but it does not mean, see, there's a lot of factors why a particular bank is better or not, right? It is because of their asset quality, lending capability, and margin, premium on the market. Because if SBI is there and there are 100 frauds happening on SBI, then what's the point? So let's look at it. No, if market cap of this is how much? 2,38,000 crores of SBI. And what did you say? Kotak, right?
Yes.
But if you also know, Kotak and HDFC are the banks that work like very clean. Right? So there are a number of factors why the market cap of this company is there. Because their asset quality might be good. They're very clean. They don't have any bad, very low bad debts. If you see SBI, everywhere they're bad. Everywhere there's some problem with SBI. So you can read about that. So it's
Still
not
SBI
only,
never gets bankrupt.
yeah, it'll never get bankrupt. But also if you look at the growth of SBI, it is not that great. That's why, no? If you look at SBI, it won't be that great. The growth won't be that great. Look at the 1 year chart. 329, 266. Loss. 3 year chart. 309, 266. 3 years if you held it. No point. 5 year chart. 227 to 266. 5 years if you had held it, you would have made some peanut amount. You would have got some dividends, but what's the point? Your wealth has not grown in 5 years. So why would you invest in this bank? Rather invest in the banks that are going up, which is like RBL Bank or IndusInd Bank. Did you look at IndusInd Bank?
Yes, I bought actually SBI and IndusInd at the time of COVID when this came and made 51% in SBI and around 80% in IndusInd.
So IndusInd fell to 300 in March COVID time. Okay. Then it recently shot up to 900. So it basically, if you had bought it at COVID time, it went up 3 times since COVID.
Yes, I bought it at 550.
Yeah, it still has to go back up to 1,500. So it's still a lot of pull is there. Okay, coming back, let's not deviate from this. Okay. You understood this much till now? Profit and loss, you guys understood to read properly?
Yes.
Okay, now let's go to balance sheet. Important things to look at in the balance sheet. Very, very important things. One is the debt and one is the reserves. Okay, you know what is debt? Debt is basically loan, borrowings that they have to give back. Less loan, good for the company because they don't have to pay interest on the loan. Right? If you don't pay interest on the loan, basically if you don't pay this amount, your profit looks better. Understood? So debt is basically loan. Loan is always never good. Sometimes it's good. Sometimes too much loan is bad either way for anyone, for an individual or for a company. Reserves is bank balance. How much money do I have with me in my pocket? Reserves. Like if you are a normal person, if Krish has 1 lakh reserve, but his loan is 2 lakhs, then Krish is in trouble. Same way, if this company had reserves of 1,400, but loan of 2,400, this company is in trouble. But if this company has reserves of 1,400 and a loan of just 32 crores, nothing, fine, cool, nothing, no issue. So I will not even look at this. The problem where this would become a very big problem if this loan amount is very, very high. That is when the problem comes. Understood?
Same is the case with ITC, right? They have,
correct.
almost
So that's why they're so big. No, that's why the market cap is so big. But imagine you're analyzing a small company, then you need to do all this.
Yes.
Now I'll tell you the important things to look in this. One is the total debt. Okay, it should obviously be lower than your reserves. Okay, total debt should be lower than your reserves. Very simple. Now this is very important. Derived interest outflow, something useful for you guys. Okay, this is where sometimes scam happens. So it should be very important. What is derived interest outflow? Derived interest outflow basically says average amount of interest should go out every year is approximately this much. Because you take the total debt, how do you calculate this amount? You basically take the total loan that they have, say 25 crores, 32 crores or whatever, and you multiply it with the interest rate, which is B9. If you go to B9, the average interest rate is 12%. Average. We're just taking an average. The company might have taken loan at 14%, 15%. That's okay. We are looking at mota average. Okay. So what this sheet says is that if the company in March 2019, it should have paid approximately 3.31 crores as interest. So the best way to check this is to go up, go to your interest tab here. Is it 3.31, 4.65? Okay, good, fine, approximately the same. This year it should have been 3.47, it's 3.03, approximately the same. The only place I will get scared is here. 14.54 crores is supposed to be paid, but this year it only paid 5 crores. Why did it pay 3 times lower? Investigate. Right? Because you know for a fact that the debt was 48 crores. Yeah, tell me.
I didn't understand the derived interest outflow.
Okay, derived interest outflow, basically what happens is, assume you have 25 crores in debt. That is what the company is saying. In March 2019, the company had 25 crores debt.
Yeah.
That means it has a loan or borrowing of 25 crores. Now we are taking an average interest rate of 12%. You can take whatever you want, but 12% is average. So I'm just trying to find as an approximation, if 25 crores is the interest rate, if 25 crores is the loan amount, you tell me interest would be 3 crores, 12%.
Yeah.
So maybe the company is paying at 14% or 15%. No, possible, but I don't care. I'm just saying what is the average it should be. 12% means 3.31. So it should be around that only somewhere. 4 crores, okay, fine, great. He paid little more, very good. This is okay in companies because this company does not have so much loan, so it is fine. Imagine a company that has a lot of loan and they don't. So what happens is basically if a company has a lot of loan and it's supposed to pay a 12% amount, but the company only pays some 1 or 2% amount, then you know it has not paid the loan properly. If it didn't pay the loan this year, that means it has to pay the next year higher loan with higher interest. Correct? That becomes a problem when you analyze a good company. So these are all, what do you call it? Health check. Is the company doing business correctly? Is the health correct? Is there some scam happening? If the numbers are not big and different, it is okay. If usually this is very evident in a very high debt company. The debt, they don't pay a proper amount. That's when you have to go back into your annual report and find out why is it not paying. Sometimes a bank give you 3 months, 1 year MAF also. Don't pay me loan, don't pay me interest for 1 year. And then we'll start after that. All that schemes are there. But any big difference, you find out why.
So suppose if a company is not able to pay the right amount of interest, such as in this case, so it should not be a deal breaker, right? If it's happening consecutively, like for
if it's happening every year, then it's a deal breaker, no?
No, but if it only happens for 1 year, then
go to the annual report and find out why it didn't pay here. What if he does it the next year? That means your money is going to go downwards, no? Your share price will go down constantly.
Yes. Okay, got it.
So if you think that this year he's paid very less loan compared to that last year, then there is something wrong. Does he not have money to pay the loan? That we will analyze when we come to something called cash flow analysis. Basically, see, numbers you cannot hide. All these numbers match up somewhere or the other. Got it?
Right. Yeah.
A lot of people do not emphasize on cash flow analysis. I emphasize a lot on cash flow analysis because this is basically what it says. See, net profit, how they played around with this tax rate. You can play around, fine. Okay, you're telling me after the tax you paid, you got 272 crores. Yes, right, correct. You have got 272 crores. That means this 272 crores should also reflect in your cash flow from operations. It should be 272 crores. Is it 270 crores? Yes, it is around 272 crores. Correct. You are right. You are not doing some scam. By the way, a lot of companies, they show net profit as something and the cash flow is something else only. Did you understand this logic, by the way, what I just told you right now?
Yes.
Cash profit after tax means this is my final profit. I've paid everything and I've got money in my bank account. So automatically that means cash flow from my operations, which are all these operations I've done, should be around 272 plus depreciation you add. I'll tell you why that later, but you should add depreciation. So obviously the cash flow from operations should be more than my net profit amount. Sometimes companies show it less than the net profit amount. That is a very scary thing. Okay, for example, here, look at this. I will go through this much later, but basically look at, say, for example, this year, March 2016, net profit after tax was 162 crores, but cash flow is telling me that it's only 140 crores. Where did 22 crores go? How can that be possible? If you're telling me your profit after tax 162 crores clean money you've got, suddenly 22 crores have disappeared when it comes to your cash flow from operations. How? How do you find this out?
The incomes from the non-operational activities, they have it shown in the operational activities.
No, that is fine. But I'm saying your net profit after tax is 162. If you show income from other thing, it should be more than 162. No. How is it 22 crores less? That's not income. That means it's gone out somewhere.
They
Understood?
might have paid debt, some debt from.
There is outflow of cash somewhere.
Yeah, there is outflow of cash.
Yes, correct.
The debt, why debt? Debt is already calculated here, no? In the 162, you have paid interest of 10. 10 is already cut from your.
Yes.
162, usually what happens, you take 162 plus you add depreciation cost, which is 41. It should be actually 200. Because depreciation doesn't actually go away from your account. It's the money is still there. It's just a fictional number that they cut, right?
Yeah.
So it should be 200. Cash flow should be 200. How is it 140? Oh, something's off here. This is weird. So you highlight this, go to March 2016 and figure out. But if it's 1 year, leave it because you have multiple years data. But every year, if they're showing less, it is a scam. Like for example, this year, 193, 194, correct. 272, 275, fine. 184, 201, very good. 133, okay. This is, anyway, this year was off. But you see that the health is fine. The company is not doing something drastically different, correct? Then it's okay. That's how you'll basically understand. But this I will get to later.
Shashank,
Yeah.
the depreciation, these numbers are close, but even the depreciation is quite high. So like
Yes,
depreciation.
the depreciation should be added. So the best way to find this out is to go to the cash flow statement and figure out why. So for example, let's do March 2020. Anyway, I have it open. Let's find. I'll show you the entire cash flow right now. Is this March 2020? Yes. Okay. Let's go to 138. Balance sheet, profit and loss, cash flow. Okay, cool. Now wait, let's go back to this. Ideally, my cash flow should be 272, which is my net profit. Okay, plus my depreciation of 66. So it should be 333 approximately. Chalo, 340 because 6 plus 2, 8. 340 should be my cash flow from operating activity, but they're saying it's only 275. Why? I want to know. Okay, it's showing 275. Let's find out why. Wait, where is it? Net profit before tax. This is net profit before tax. Okay, which is fine. 3,48 was there. Then you add depreciation. 66 crores added here. Very good. Awesome. Now that foreign exchange nonsense that was there as an exceptional thing that was not a part of your income but a part of non-income. Remember we saw it on top. 6 crores. Now that has been outflow. It has gone out. When it's positive means cash has come inside. Okay, here you have added to the cash flow. This is cash outflow. Then interest expense, cash inflow. This is cash outflow again. So some profit slash loss slash something. They have done a lot of nonsense here. And that's how it comes up to, if you look at finally here, it comes up to 275. A lot of things are here. That's come in, gone out, come in, gone out. Dividend income. So they have to pay dividends, so the money goes out. They have to pay interest income, money is gone out. Government grant, they paid some 91 lakhs. Nonsense. They've done so many things. So this is how you find out how it's low. So if there's too much nonsense, then there is something to get scared. For example, this one, look at this.
Yeah, that's what I was the point.
You need to find out what this is. Profit on sale of investment designated as FVTPL, net gain. Okay, so we need to figure out what is this 25 crores. Okay, and why is it adjusted as a negative thing instead of a positive thing? If it's a profit, the money should have entered the cash flow, but it has not entered the cash flow. So why has it not entered the cash flow?
Maybe it was a loss on sale of asset.
Yeah, it might have been a loss, but it says profit on sale. And it says net gain in brackets. So something's off.
Gain or loss, right? They have.
No, but they have put brackets on profit, no?
Okay.
And they would say loss on sale. They would not say profit on sale. So yeah, whatever. You get the point, right? This is how you investigate. All the answers of this are written somewhere, boss.
Why the profit in negative? Like how can profit?
Correct. So you have to read. Maybe they've adjusted it somewhere. It's accounting. Horrible accounts is. Even though it's profit, they adjust it somewhere. So you have to read this article and figure out What have they done? Where have they adjusted this? Something they have done with FVTPL. If you don't want to find out also, just go, do FVTPL, right? Just do a normal search like this, Control F, and start searching. You'll find that there are 22 instances where they've said FVTPL. See this, some fair value changes of investment. This is what they might say, that the fair value of the company was something else, but we sold it for something else, so it is a loss for us. You get what I'm saying? See this.
So FVTPL means fair value through profit or loss. There may have been some revaluations.
Yeah, that's what I'm saying. So you can, even though it is cash flow coming into the business, they're showing it as a loss. That way I can say, say you sold me a water bottle. Okay, then I'm selling it back to you. I'll be like, the water bottle is costing 100 rupees, but I sold it for 50 rupees. So I'm at a 50 rupees loss. But actually I've got 50 rupees. No. So that's what I said. You can deep dive into it, but this is how you deep dive into it. Now look at this. There is under deferred tax. Remember we saw deferred tax on amount we saw. In the tax also there is this fair valuation investment property plant. So basically this is how you deep dive. I'm not going to go into the deep dive and find out why JB did this, why JB did that. That is not my job. That is your job to find out when you research a stock. But I'm just telling you where to go and how to find. Annual report is the answer to everything. If it is not on the annual report, then they have not disclosed it on purpose. So be careful. Understood? Understood, guys?
Yes.
Till now, any doubts? That's it. This for this session enough, or else you guys will get a headache. Till now, any doubts?
No.
This sheet is so important because it separates you from being an average trader to a smart trader. Average trader will just look at news articles and say that there is some net profit that has gone up 30% and you will believe it. But a real trader will be like, wait, you're saying net profit is up 30%, must be very good. Let me get back to you on this, because there might be some tax not paid. There might be some weird exceptional item that has come. You don't know, but you are smart. You need to figure this out. So you think it is very easy to find good companies in the stock market? It is definitely not. It takes months of research and tracking to find out what is a good company and what is a bad company. That's why I say go to Value Picker, because if all of us in this cohort had to find one good company, you would find one, right? Or you would find 5. That's exactly what Value Picker does. There are so many like-minded people who start finding out good stuff, saying this is good, this is bad, this is good, this is bad. So you start following them and figure out what is good. If you want to go, just go to top instead of latest. Find the top companies that are doing good. Laurus Labs is here. And ITC is here. You can start looking at Dr. Reddy. There's so many things and you can read it. Not saying that this is right and you have to invest in this, right? You get names here that you can do your own research on and then figure out what is good, what is bad. Aztec Life Sciences, you said right today?
Yes, sir.
It's
I read it here only.
Yeah, so if you go through this, no, it is beautiful, guys. You just need to spend time on this and go through this. This is like too much information, which is amazing. And you will become an expert after you start reading each company, each industry. The more you read in this market, the more smart you become. Because there are so many industries. Pick one industry and start mastering it. Pharma industry, I became an expert only in March. When the COVID happened and pharma was the boom, that is when I started researching about pharma, and then I understood what fucking pharma was. Till then, I didn't know what pharma was. Right now, I know what pharma is. I know what API is. I know what generics are. I know how they make money. I know how everything works. That's why I found Laurus Labs, found Granules.
Shashank, how do you get to know that which industry is like the current booming in the current session? Like for example,
how you would just find the trend? No, and we all knew that in the pharma boom was going on when COVID happened. We all knew.
Yes, but there isn't any news like except from COVID that like the bank industry is like booming.
No, usually you will see a lot of similar type of companies doing well, and you will see similar type of companies coming in the market. For example, right now we have an IPO boom going on. Agreed?
Yes.
Each and every IPO is hitting 100% gain on day one. How is that possible? Was that ever possible before? Was that ever happening before? Currently, we're in an IPO boom. Just now we were in the pharma boom. Now we're in the IPO boom. Me and you are smart guys. We should take the opportunity and start investing in these IPOs and try to make money if possible. If not, we lose money. But if you had invested in Burger King on day one at whatever rate it launched, you would have made money. What, 111, 112, 115, 120? If you had bought it, it's at 180, still made money. Mrs. Bector, if you had bought it 500, you would have made 20% today. Tomorrow, Anthony Waste, I didn't even apply for Anthony Waste. Okay, I won't get the allotment. But the day Anthony Waste lists at 10 o'clock, if it is oversubscribed, which I think Anthony Waste is oversubscribed.
But I saw that the gray market premium is like 81% down, something like that.
Then you don't invest. Then you don't invest.
3 times.
Then you don't invest. Wait, let us check.
Only 3 times oversubscription.
See, it says it's fallen down by 81%.
Yeah.
Let's see what has happened here. Where is the subscription?
It's oversubscribed 2, 3 times.
No, it's very important to see what has been subscribed more.
I think it was the retail part.
Ball.
Very easy to check. We'll check now. Okay, here. QIB was 9x, NII was 18, and this was 16. That means a lot of interest from NIIs and QIBs and retail. So it was fairly good. So then I don't know why this article of Business Today is there that it fell in 2 days. Why? See, it's already saying that the firm is likely to see a weak listing on January 1st. Wait, January 1st, the market's open or what? I thought New Year it might be shut. It doesn't tell you why it's going to have a weak listing though. Just the market, gray market fell. So that means if the gray market fell, that you know that this is a little scary. So don't touch it, or see if you want to touch it. But you knew for a fact Mrs. Bector and Burger King would do really well. Everyone knew that. So if you didn't take opportunity of it and buy it on day one, I don't know. I took opportunity. I got Mrs. Bector today.
Even I got.
My friend
How much?
invested at 500. He sold it at 580 in the evening.
I bought it at 520. How many lots
I
did
bought
you
it
get,
at 508 and sold it at 575.
Great, you made money. So it's not that, that's what I'm saying. It's not that difficult in the stock market to make money, but you should know how to use opportunities to make money, because in a year, in 365 days, the stock market gives you a lot of opportunities to make money. Some money, little money, something, but you know it'll come. 100 times it'll come. It has kept coming. So you remember that crash that happened, 1,700 points crash? Recently it happened 1 week ago.
Yes, Monday.
Monday. We all
Yes.
knew that the next day it'll go up. It went up by 600, 700 points, right? The next day.
Yes.
Yeah.
How many lots did you get, Shashank?
How many?
Lots of in Mrs. Bector.
One lot, dude. I only got one lot. No, but then I bought it at 500 and kept it. No, I've not sold it yet. I bought it at 500. So yeah, my average price goes down. So it's good.
What do you think about Medisco? Like it has hit
Stay away
upper
from it.
circuit.
Stay away from it. Stay away from it. It's not worth the risk. Stay away from it.
Shashank, when you buy at 500 and sell at 580 on the same day, let's say.
Yeah.
How does the taxation on it work?
You have to pay tax around 15%.
Okay.
Hey, but your tax is always calculated at the end of the year, because I'm pretty sure you're going to make some loss which gets adjusted.
Correct, but so I have to account like, for example.
It's 15% for each and every gain.
Or it's a cumulative gain.
No, it's a 15% for that gain.
Yeah.
So what if I don't account it in my tax return or something?
You have to account it. If you don't account it, they'll come after 3 years and put on big penalty on you with interest. Would you want that? Paid off. How does it matter? You've made much more money than paying 15%. You made 85% of that.
I think we will receive the money only after deduction of tax, 15% deduction.
No, you don't. You don't.
Okay.
You don't. You only pay STT, which is security transaction tax. You do not pay capital gains tax, because capital gains tax is always adjusted, because today you made money from 500 to 580. Tomorrow you might lose 10,000 somewhere else. So your actual gain gets adjusted, right? That's why I remember I spoke about tax loss harvesting. Do you guys remember? Did I talk to you guys about tax loss harvesting?
No.
No, not yet. You had talked about that in a session.
In Quico session, I talked about it.
Yeah.
That is beautiful. I'll talk about it later, not now. Now we're gonna be done with this. Okay, no more questions, guys. We're done. Now you guys take a break for Christmas. I don't want anyone to focus on this. If you still want to learn more, you have enough time, free time for the next 1 week. I think you guys should start finding out some good companies, like how one guy found Aztec, one more guy found something else. You have a community, take advantage of the community on Discord, sit together and start talking to each other and figure out what to find out, right? Find out some good stocks and tell it to us after Jan. We will all do research together. Cool?
Yeah.
Easy?
I want to know that I hope we don't pay tax on the money we earn from stocks, like except from dividend.
We have to pay capital gains, boss. 15%.
Like, I don't have a job or anything, so still do I have to pay?
You have to pay 15%.
Okay.
15% you still have to pay. That is instantly. Even if you get 1 lakh, you have to pay 15% on that. Capital gains is completely different. We'll get to that in taxation. Don't worry. There's enough time for that. Cool.
Okay.
For now, you focus on making money. Not don't worry about tax, because if you make 10,000, you're only paying 1,500 tax on 10,000. So it's okay. Don't be that conjuice. Also, if you're making 10,000, be happy about that. A lot of people
I
can't
didn't
even
know that. You didn't mention anything about it in the Meta.
It's there in the free
market
videos
series.
on Meta app, dude. LTCG and SGCG.
Personal finance.
It must be in the tax section.
I've made one entire tax series only. That's why I said you guys need to watch it before doing the Pro League. Okay.
Will you do a session on ratios?
Not now, later.
Okay.
Okay, cool guys. So we'll meet after New Year's. I want you guys to chill out Christmas, 1 week, New Year's. Have fun. And if you have free time, work together in the community and research about new stocks. Ask each other, guys, I found something else like Aztec Life Sciences. Do you think it's good? And if I'm free, even I'll look at it and tell you guys. Cool? Don't waste the time.
Sure.
Okay. See you guys. Great
Happy New Year,
Christmas
Shashank.
and Happy New Year.
Good night.
Bye, guys.
Happy New Year, Shashank. Bye. Thank you.
Yep. Bye.
Bye.